Good afternoon, everyone. Hoping everyone can hear me. Hoping everyone can see the screen. Unfortunately, my webcam has decided to stop working yesterday, so I haven't got the webcam up at the moment. So apologies there. Hopefully you can hear me. The connection where I am as well is a little bit ropey as well. I'm actually in a different location this week, so hopefully it holds up. If it holds up, great. If it doesn't, then I'll be releasing a video later. It does have a tendency for the internet to kick out, so I will hope that it stays for the majority of the webinar. So if it doesn't, and you do see me stop at any point, then there could be a possibility that it will kick back in within 30 seconds. It just seems to be every hour that I'm here, the internet drops and then comes back in. So we shall see if that happens. Hopefully not. Fingers crossed it doesn't, and we'll get some analysis done. We'll just see how we get on. If not, I'll just produce a video for later. But good morning, guys. Morning, Denise. Morning, Ecam. You can hear me. That's brilliant. Let me know what you guys are up to, what you're up to with your trading and things like that. And I'll take a little look at cable here, starting to see a little bit of a pop to the upside. Hi, Cody. Hope you are well. Yeah, let's see if we can get through this without many interruptions. So yeah, looking at cable, looking at the potential for cable to trade a little bit higher here at the moment. Obviously, we've got some dollar data coming up this week. US markets aren't in today. The one in yesterday either. So, or it would have been light markets yesterday. But it's Independence Day in the US, so I wasn't expecting much to be happening this afternoon, and we haven't really had much apart from we have had cable just pop a little bit higher slightly. So, you know, running into the UK close. So I'd see a little bit of a retracement to that now, but I do still like the opportunity for cable to be to the upside here. And we are trading above that one spot 26.50 handle, which is the level that we were looking at, where we've been above on this weekly chart for a while. So waiting to see if we can get a bit more of a development here, because it's still potentially like a move up to that 1 spot 3 handle. If you watched my video yesterday, I discussed the reasoning behind the potential to see prices up at the 1 spot 3. Yeah, so just going to see to wait. Now, we obviously have talked a lot about the dollar index in the past, and where have I put the dollar index tab at the moment? Here we go. If anything, it is just still range bound. I have favored a little bit of dollar downside this week, but what I did actually was just zoom out on the daily chart, and you can see that we've really actually been range bound ever since we kind of came down into the 101, haven't we? We've ranged between 101 and 105, spot 75, and I think, you know, price has really just been stuck within that. We've been trying to trade the trends within that range. But you can see we had 1, 2, 3 tests here, 1, 2, 3, 4 tests there. So we're just kind of in that midpoint of the range, that 103, 103.50 being the midpoint of the range. Price is just sticking within that at the moment. So what is the market pricing in, basically? Are they pricing in potential cuts to come, or have the cuts gone off the table? Maybe we'll find out tomorrow in the FOMC meeting minutes, especially. Denise, just been waiting to see what happened tomorrow to possibly get direction on things. Yep, that absolutely makes sense at the moment, considering the market's a little bit quiet still. Now, I've titled the live stream, "Is that yen weakness going to continue?" I mean, it seems to be continuing at the moment. We'll go take a look at that in a sec. But yeah, you can see my analysis on the dollar index for this week largely came off this weekly chart, and I was looking to see, let me just turn this down into a different time frame. So there we go. And it was largely off this weekly close because we had this kind of bullish candlestick coming from the 102s. We then failed to close above the 103 and the previous week's candlestick. So that just shows me that there's not much momentum within this market at the minute. And, I think if we trade through this trend line that I've got that's developed on the daily time frame and we close below it and we start to see some new lows being formed on this 4-hour time frame, especially maybe the 102.75. So we can trade through that. I think that's going to be a bit of a catalyst for price to start trading back to the downside here. Now, I don't expect the US dollar data to get sort of better this week. I'm expecting it to be a little bit worse because all forecasts are showing a little bit of slowdowns, but we'll see what happens here. I think at the moment, the dollar's probably not the currency to watch, or if you are going to watch it, you could probably take advantage more on the side of the weak side of it. And that's why I like cable long at the moment, because pound has been a little bit bullish against most currencies at the moment. We can see from this 4-hour time frame that we consolidated, rally, consolidate, breakout once again. So, are we going to start seeing a little bit of momentum with cable now? Maybe start to see it take some of these highs. I think it'd be interesting to see how it reacts up at the 128.25, which were these highs that formed back on the 16th of June, and this high here that formed on the 22nd of June. So, if we can see what happens to cable here on this H4 chart, then I think it would be a good opportunity to see if price can continue to the 1.3 handle. So just going to wait and be a little bit patient on cable, see if we can get that move back to the upside. But let's go take a look at dollar yen. Yeah, Denise waiting to see if we get a daily close above 103.50 or below 102. I think that's the sensible decision, to be fair there, Denise, especially when we're looking to trade the dollar. But looking at dollar yen, so, intervention rumors were 145 from the BOJ. Haven't actually had any confirmations of any interventions. And to be honest, that doesn't look like an intervention, really, does it? Which means one or two things could happen, one or two scenarios. It means that price could trade higher. We could see an increase or a decrease in the yen, which means that price could still make it up to sort of the 150s, 151.50s. So there's still a potential that, obviously, that was the sort of last intervention from the BOJ, was around that 150 handle. So maybe traders, although we're starting to see a little bit of selling coming in here, maybe traders are thinking that the 150 is going to be where intervention comes in. So dollar yen still may have some legs back to the upside here. Now, one currency that's performing pretty well is the Kiwi. It's performing very well against the Japanese yen. I don't have it on this particular chart set, but I did have it on my others. Let's just bring this in here and do a quick breakdown. Kiwi yen flying at the moment to the upside. Today we've done about 40-50 pips, which isn't unusual for Kiwi yen in particular. But I just want to break this chart down because we've got some quite nice levels to potentially work with on Kiwi yen. First of all, we've got this high in here, which is around about the 93.50 handle, which were the highs that formed in 2014. So December 2014. So if I was just to pop this on here, like so, 93.50. I am just gonna, what I need to do, guys, is get something in the corner that just shows you what pair we are on. So I am just gonna quickly just go New Zealand yen. I'm just gonna try and attach it to the bottom of the screen somewhere, just so we know we're talking about Kiwi yen. 93.50 in here. I also like the 91 handle as well. as a potential opportunity. Now, these are the highs from 2015 as well. Now, these become a little bit clearer on the weekly chart. So we'll just zoom out a little bit. You can see these highs here on that weekly. Probably could stretch it to 91.50, to be honest, just because it's got those opens and closes in there. So we'll stretch it to 91.50. But the New Zealand dollar performing pretty well. And if it's going to perform well against one currency, we know it's going to perform well pretty much against the Japanese yen at the minute. So, yeah, 91.50 could be sort of that next level of interest for Kiwi yen, especially now that we've traded through the highs here. Okay, so these highs kind of coming in around about the 88 level. Let's say 88.50. Might say 88, sorry, 87. We'll go 87.50 on this, and then we'll draw a box around it so we know that it's that zone in there. But I quite like this opportunity that price is traded out of this range that's been developing in the market. Okay, this range between 81, maybe even down to sort of 80.75. We could stretch that down to. Let's just pop that in as well. Whoops. Let's go to properties. Let's go 80.75 on that in there. And then we can, this is the range I was talking about. So price in the range in here. Okay. We're now trading outside of that weekly range. So there could be a possibility that we start to head up to the 91.50 handle here for New Zealand yen. Okay. So it's definitely something that I'm watching quite closely. You know, we could also argue there's a little bit of a bullish channel that price is working with as well, but 91.50 seems to be the area of interest. You know, if we look at it from a daily as well, which we're making new higher highs here. We're just zoom in, making new higher highs. Look at the 4-hour time frame. You know, haven't really broken the 20 or the 50 recently. We're just kind of working our way within that. So yeah, it's just looking for opportunities here. Now, obviously, we have a consolidation, which is around about the 89 handle, which is an area of interest, I would say, in the market. So maybe we'll see, you know, a bit of a pullback down into the 89 handle, maybe see some kind of buying coming back in at that point if we did get a bit of a pullback. So Kiwi yen H4 chart, 89 looking pretty good, I would say, at that point for some potential price action. Let me just get rid of that. Just going to put a little box here at 89. Hopefully that makes sense, guys. There we go. So potential around there, I feel. To Sharon, Euro Kiwi has moved quite rapidly. Kiwi has been fairly bullish. Oh yeah, cool. So yeah, on the same lines as me there. New Zealand dollar has been very strong. I don't think I have the Euro Kiwi chart set up at the moment. Let's have a quick look. No, not a market that I have focused on. Let's have a look in here. Right, guys, I'm back. That was the internet drop that I was talking about. So it just pops out for about 30 seconds. So hopefully I'm still broadcasting. Hopefully you can still hear me. Yeah, it just drops out for a random 20 seconds. So yeah, hopefully I'm back on the screen. It looks like everything's working. So I'm either talking to myself or I have jumped back up. If so, I'll continue anyway. Ifran, I'm looking at GN for an upside response at 205. Okay. So let's have a quick look at Euro Kiwi first. Euro Kiwi, you can see we're in that downward trend here. I'm just going to pop on our template here. So yeah. Okay, back on. Thank you, Royston. Thanks, Roberto. Thanks for letting me know. Yeah. So I mean, Euro Kiwi. I mean, I can see probably why you're looking at it. That reaction up in here, right? The rejection on that weekly looks quite nice. We've got a sort of bullish sort of trend line running through here as well. Yeah, nice rejection from there. Price really pushing to the downside here on Euro Kiwi as well. And yeah, just coming into a little bit of support at the moment. Looks like we're respecting this trend line. We do have a lot of consolidation over here as well. So there might be a bit of volume running through here as well. But yeah, Euro Kiwi 4 hour looks good for a pullback, maybe into the 176.90. What is that? 176.96. Those previous lows there. 20 and 50 just crossed over. So might be worth having a little bit of a pullback there. Pound Kiwi as well. Well, I quite like pound upside. So pound Kiwi for me is probably not too much on my radar. But we'll go check out the 2 area. 205.10, 205 level. I mean, it looks like price is reacting from the 205 level at the moment. I guess it's these weekly highs in there. If I just draw it on very quickly with a line, this kind of weekly high in here. The only thing I would say is just the fact that I want to be a buyer essentially of both at the moment. So I don't particularly want to be in and around this particular market personally. Obviously, markets that you want to trade, obviously have a look at yourselves. But I just think this one might be a little bit range bound. I think the action is going to be in your Kiwi yen. But, you know, that could change very rapidly. You know, if we look at the Kiwi on a broad basis, you know, it's continued to move higher. You can see pound yen here has even continued to move higher as well. And it's the point of when is it going to turn, essentially? When is that dollar yen going to turn? And when it does turn, I think we're going to see a bit of a shock. Now, there are a couple of things that I am watching to see if we get a bit of a heads up. So, for instance, the VIX index, I'm having a little look at to see if the VIX could have a little bit of a change up here. Maybe we could see, you know, the 13 area coming in. And we're at about 13.20, 13.30 at the moment. So it'll be interesting to see if we do get any kind of reaction in and around that point there. So, oh, sorry guys, dog's going off. Any other questions? Sorry, questions. Why is the US dollar weak today? Awesome, Wenke, that could be a multitude of things. We've had some dollar data, poor data lately, but we've also seen the US, the market's not in at the moment because it's US Independence Day. So we're probably not going to see any of the US in at the moment. So that's something to consider as well. To show what is driving the Kiwi price, I thought Oz rate pause could have a negative effect on Kiwi too, but I guess I am wrong. I don't know what's particularly driving the Kiwi price, to be honest. I haven't looked too much into it. It could be down to a multitude of things. I think Kiwi data still pretty strong. Let me just see if I can get some information up about that. I think it's gonna depend on a couple of different things, but I'm pretty sure if we look at, let me just have a quick look. We've got plenty of time, so right, I'm just having a look at, so inflation's still up at 6.7%. Interest rates at 5.5%. GDP growth actually came in a little bit higher. Unemployment rate still at 3.4%. So data not too bad out of New Zealand at the moment. Let's have a little look at what's going on. Right, inflation rate coming down 1.2%. Let's have a little look at the inflation rate. So yeah, I'm having a look at it. So it came down from 7.2%, but it's not really changed dramatically. Down to 6.7% would be a little bit better. Let me just have a look at the import prices, export prices. Export prices coming down, which is good. Good for New Zealand, big exporter, obviously. So it could just be down to the fact that we've got still high inflation rates. You know, there could be a problem that we're going to have to start seeing some movement with rates again. Let me just see if there's any news in the RBNZ that has come out that we haven't had a look at. So they're talking about monetary policy statements. So we did get some monetary policy statements out of the RBNZ 9 hours ago. So maybe that's a catalyst as well. Yeah, okay. So there could be a potential for another 25 basis point hike in New Zealand. So that could be a factor that's driving it up as well. And the market has, is generally, risk on, isn't it? We can see yen's weakening, VIX is down, Kiwi and Aussie perform pretty well in risk on markets. So there is that general consensus as well. Any more comments? Vincent, good afternoon. Good afternoon, Vincent. I'm doing well, thank you. Hope you are too. Yeah, Denise, the market has been pretty risk on. Yeah, absolutely. What's up with dollar CAD? There's just no direction on dollar CAD. No direction on dollar CAD. Don't think it's a market to even get involved with. Again, it's not a chart I've even got open here because it's just not a market that's on my radar. It was on my radar a while back when we were looking at potential for it to either react from the 1.33 area for a little bit, which it kind of did. It kind of rallied about sort of 300 pips. We traded through those lows now, and we're just going sideways here. Again, no direction on the dollar. So dollar's not where the focus is going to be at the moment. Interesting though, stock markets. Stock markets are quite interesting. I just feel like the stock markets are in a bit of a world of their own at the moment. Look at the S&P 500 up again. Last week, had a 3% rise last week. Yeah, obviously inflation coming down is good. But I just don't see the downside is done here yet, especially because the Fed is still fairly hawkish on interest rates. So, maybe the 45.50 is going to be something of interest for us very soon. Yeah, I just don't personally, I just don't see the war on interest rates being done just yet. And obviously the stock market can react fairly negatively to that. Interest rates going up could affect the banks as well, the US banking system. Major stress could be put on them. I know they did the stress test last week, didn't they? Be interesting to see what happened with that. But I just don't think this is over. I would be very, very, very surprised if we got back to all-time highs without another drop in the stock market. I would be very surprised. Just personally, I just think that to me would be very interesting. Do I want to call that 48? 47.90. Let's see what 48 says. 4,800. Stock market lives in their own world. Yeah, Denise. Yeah, definitely. I think as well, you've got sort of the earnings coming out as well. And obviously that's going to catch up, isn't it, with sort of the inflationary moves that we've had, especially sort of, I guess, wage growths and things like that. You've got to remember at the moment, the data is also lagging, essentially. So it's going to be interesting to see what's going to happen. Yeah, I think after the summer where we start seeing sort of Q3 earnings, I think that's when it could be a bit of a sticky point for the stock market. So yeah, it's just a bit of an interesting move to see at this current moment in time. What else was on my radar? There was a few other things on my radar. Gold. Let's have a quick look at gold. Gold was on my radar, not from a any type of view, but a technical one, really. I still think the dollar's going sideways. So, really speaking, if the dollar's going to go sideways, so could the price of gold. We did get a technical sort of rejection of that 1890 level. So that was my kind of thing I was looking at. Technical rejection at 1890, pin candle. Is this going to start seeing an influx of buying maybe coming into the market? We still might get that towards the end of the week, but we'll have to see which way the dollar starts to go. So what I did then was jump down into my 4 hour. So I want my 4 hour to start agreeing with my price here, and you can see that we've got sort of elements that we're starting to see the 4 hour start to agree. It's not quite there yet, but what we're starting to see is those higher highs and higher lows. But really speaking, we've got a level around 1932, which could be an element of an area of interest. So maybe if we did see that sort of area break here, for instance, because you can see we've got support, a lot of support and resistance. Maybe if price traded above sort of 1950, I think that would really then kind of give us the sort of main idea that buyers are back involved. 20 and 50 cross. I mean, gold doesn't really respect the 20 and 50 all that much. You can see we kind of sink below it quite often, through here, for instance, here and here. I mean, when it does work really well, but there are times where it can sink through it. So just be aware of that. So, yeah, I'll just be interested to see what happens. Can we get a little bit of a move higher? And if we can, is that going to be something we're taking advantage of? To showing gold taking advantage of the US holiday? Yeah, potentially. Yeah, we could just be seeing a little bit of relief to that recent downside just because it's low volume at the moment. Right, any questions, guys? Any other markets that you're taking a look at that you want me to have a little look at? Kiwi dollar performing pretty well. I haven't looked at Kiwi dollar per se, but could be a market to watch, I guess, if we start to see a little bit of a move to the upside. Let's break this one down a little bit. So weekly chart, I can kind of see some kind of flag pattern really maybe being broken out there. maybe the 6,500 could be a point for us in the future. $63.50 we'll go for here. Those highs, they'll probably be open up on a daily time frame. You might get away with 63.75 there, to be honest. Something like that. 6,500 up there. Come on, MetaTrader work. Here we go. Yeah, something like that. You know, Kiwi starting to find some support down at these 6,100 areas down through here. Maybe that break there was a little bit of an outlier to the sort of supporting zone, which could be around that 6,100. You know, we know the markets aren't perfect. They're going to overshoot these levels every now and again. I think this was when we were talking about it in terms of Aussie as well, because Aussie broke through those lows, didn't it? And it didn't really follow through. We had a bit of a breakout there. Prices come back within. Again, another little test down at the 650s, 6,100s, and we're starting to bounce back again. So be interesting to see if we can start clearing these highs in here. You know, if we can start breaking through these highs in particular. 6,375 could be an interesting point for us. Again, if we kind of follow it from the weekly perspective, it looks a bit choppy, but if we are going to get that weekly impulsive phase, maybe it's a bit of a weekly sort of flag pattern, then we could be eyeing up a bit of a 4-hour turnaround here. So we've got these kind of areas there, haven't we? Which is the 6160s, 20 and 50 moving average of cross. So yeah, maybe a bit of a pullback down might be interesting to some traders. 62.40 highs there being of interest as well. So a couple of areas to potentially look at there for Kiwi dollar as well. Denise, Bitcoin broke out of the consolidation with a confirmed close above 3,100, 31,000 yesterday. I'm waiting for a pullback to 3,400 to possibly get in. Let's go check that out. Yeah, we looked at that last week, didn't we? I know you had to shoot off. I hope your granddaughter's okay, by the way. Yeah, that sort of zone in here, that kind of consolidation pattern, yeah, definitely could be one to watch. Let's go to a lower time frame. Let's have a little look at that. Yeah, quite like the lower the range. You know, if we started to get back to the lower the range, it could be something of interest as well. But yeah, we'll see. 31 break of 31.40 could lead to a bit of a breakout there. That looks quite good. Where could it target? So we've got some immediate highs here at the 31.87s. I think on the weekly we were looking at these lows, weren't we? That kind of low in there could be of interest. About the 35. So yeah, we'll see what happens there. See if we get kind of a continuation of this bullish run or this bullish breakout that we've had on Bitcoin. To Sharon, I wanted to ask you about handling losses. Okay, Denise. Well, hopefully, touch wood, she's on the mend and everything turns out okay. Yeah, to Sharon, I wanted to ask you about handling losses. Yeah, what do you want to know about handling losses? I think, losses are part and parcel of trading, to be honest. You've got to accept that you're not going to be right all the time. If you were, then obviously you're a mega genius and you're going to be handling, billions of pound or dollars or whatever, and you're going to be, you're not going to be here. But you've got to understand, hedge funds lose, banks lose, any kind of investment can lose, so it's part and parcel of trading. What you have to do is you have to limit your losses so you stay in the game. That requires you to either have a plan, have a strategy that has, a technical result to it that you can track, or you're going to have to, kind of look at your sort of your profit taking. Are you taking enough out of the moves that you're trading? Do you close your trades in a profitable position? And if you do, what happens to those trades? Do they continue? Do they continue to go on? If they do, then great. If not, so on Friday, I took 2 losses. So I took a loss on Euro Aussie. So actually, let's go talk about that. So I took a loss on Euro Oz. So I went long on Euro Aussie. Like when you're on a losing trade, do you let the trade run and hit your stop loss, or do you close manually when you feel like it'll lose? That's a good question. There's 2 ways you can kind of unpack that, I think. And the first way is, if you put a stop loss in the first place, what's it there for? Right? You've put a stop loss in at a position. Why have you put a stop loss in at that position? And it's because you're going to be wrong at that point, right? And it's how much you're willing to lose if you are wrong. So the stop loss is there for a purpose. And, that to me is I'm going to give the market room to breathe unless something completely tells me otherwise. Now, a lot of my trading is done with strength and weakness in mind. Okay. So what I tend to do is, if I'm in a losing position and let's say, fundamentals change in my position, then I close out because there is a sort of change to the strength and weakness. Okay. So I have a sort of manual exit. So that's what I did with Euro Aussie. So I actually went long at 163.85, I think my entry was. Okay. So around here. Just grab this yellow box. So around this yellow box was my entry point. Okay. Now I use ATR stops. Now my ATR stop wouldn't have even been triggered yet. So my ATR stop brought me down below this low. My target was way up because I thought Euro Aussie was going to be a big winner, right? So I had quite a large take profit on that. I closed out on Friday pretty early. Okay. I think I was in a very small loss. I think I was about 40 pips offside, I think it was. Now, the reason why I did that is because I noticed a change on my strength meter, which was suggesting that the euro was no longer getting stronger, but the Aussie was also getting a little bit stronger. So there was a different change in the dynamic there, and the market started to pull back. So I was also monitoring this daily chart as well. Now, when I see a daily bearish close and I'm long in the market, I don't particularly like that. It means to me that the market is in a retracement phase. And, really speaking, where's the most likely area for price to come back to? Well, it's probably in and around this point, right? You got those areas there. So I would say, if you are going to take yourself out of a losing position, it's got to be down to a good reason. Okay. If you don't have a reason and your stop loss is there, leave the trade. Okay. Just leave the trade. But yeah, I closed that manually. I closed CAD yen manually as well, and I was only knocked out by about 10 pips or so. I actually went long back at the 108.90 area, I think it was around this point. Price broke back above again. I went long again. Now, the reason why I got out of this one was because I saw a big sort of volatility burst, and dollar yen was at 145. So I was a bit like, is this market going to make it? With dollar yen being at 145 and moving lower. So I just cut my loss. So yeah, I had 2 losing trades last week, and those were the 2. But EuroAus was a fairly decent sized loss there. I was looking at Aussie Swiss short as well, but yeah, didn't get involved with that one, and good job I didn't in the end, because price has taken off to the upside there. So it's a good job I didn't get too involved with that one. But yeah, I think it's handling losses. You've got to take it as a, if you set your stop losses in particular areas, you've got to understand that you've set it there for a reason. Why have you set it there? Is it to be stopped out for a particular amount, or is it because that's when you are wrong? You are definitely wrong. And it can be easy to hold on to a loser as well rather than a winner, but you've got to try and change that mindset. Hopefully that makes sense anyway. Right then, guys. Vincent Pound Kiwi. I did kind of touch upon Pound Kiwi. I will just quickly say that it's not a market that I'm particularly into at the moment. I know that it's at the 2.05 handle, but I can see pound strong, Kiwi strong, so I don't particularly want to be involved with that range. And it could be a range that's like a bullish channel range. So you can see this kind of situation forming, maybe price bouncing in that range. So yeah, not too much going on there for me at that particular moment in time. My focus is actually very much still on the yen pairs. Like I said, like Kiwi yen, like Kiwi dollar to the upside, I like cable to the upside, potentially pound yen as well. So there is an option there to see. Those markets are sort of my main focus going into this week. Yeah, definitely down to trading psychology as well. It's down to your own personal psychology as well, Denise, I never risk more than 0.5%. I walk away from the chart for a while. No revenge trading. That's a great tip to have. Yeah, always risk what you're comfortable losing. If you're not comfortable losing 1%, then that's fine. Go to 0.5%. What are you trading for ultimately? You're trading for, profitable gains. You're trading for potential investment purposes. So are you trading to potentially trade large capital in the future? Then you want to put in good practices now, so that when it comes to a point in the future, you know how to deal with it, where you might be trading with more capital. So right, guys, I'm going to leave it there. We've done about 45 minutes on this week internet, so I'm going to give it a break. Thanks for joining me today, as always. Thank you for all your comments and questions. If you can leave the stream a thumbs up, I would really appreciate that. I hope you enjoyed the rest of your trading day. Again, it's going to be a bit of a slow one today because the US aren't in, so we'll hopefully see how the volatility plays out tomorrow. We have FOMC meeting minutes tomorrow, so maybe we'll see the volatility kick in then. So thanks for joining me, guys, and I will catch you potentially on Thursday. See you guys.